Oh shit, I'm not even live in the stream. See? What's up, everybody? I thought I'd turn the stream on. Sorry about that. Celsius to 200, baby. Let's go. No, I want it to go there. That's my call. QQQ opening strong and long. We have hedge pressure 378, bull long up, all signs pointing up on Qs, all signs pointing up in S&P. I mean, everything's looking great today. DD ratio numbers, a percent market cap that's bullish. We have 98% still, so stocks are still trapped in bull territory, which is great. Going into this monthly expiration, I think we're going to still squeeze higher. It's looking good. All right. Okay, let me get my little setup here. All right. Let me get my layout loaded here. Finally got the charts working. Sorry about the child charts are broken for a second. We're back, baby. Okay. Ray, smash that like button real quick if you don't mind. We're waiting for this. Okay. I hand that hedge pressure number right now. All right, let's load up my windows here. So looking good, tapping those upper DD bands you can see on my Thinkorswim right there. Get right to the chart. So let's go ahead and look at how the market is looking. We are going towards tapping hedge pressure. This could be a good long entry for those that are scalping. I guess I say that. Well, that sounds like investment advice. Don't do what I said. I'm really just talking to my student in the room here. Okay. Hedge pressure tapping 452 right now. This is resilience is actually negative though, so let's be cautious here. So no. All right, everybody. DD float failure. No, it's not float failure. This is supposed to touch the upper band. So DD ratio being greater than half, it wants to attract towards the upper band before the lower band. This is the direction it would rather go to. Float failure would be if it went towards the lower band. That's it. Okay. What did he do? Oh my god, did he pull out your cord? It's not random unless you're outside of the DD bands. A float failure would be random is if it touched the lower band and bounced off of it when it DD ratio is positive. So this is a long entry spot. I like this one, 452. Let me take a look. And also know that VIX has touched a pivot. So this is the other way around from the lesson we taught last week. So VIX could pivot against here and decay, which means that the volatility can tighten up, that this could continue to push. But again, you know, people are finding these good catalysts to find an excuse to sell, especially for holidays, you know. So it's really hard whenever in trading, when it's upwards near these upper bands. We only like to day trade inside of these areas right here below DD band. And so when it's at hedge pressure, you have to think that you have very small opportunities in here. We don't bet that it continues to rally that far. So with resilience being negative right now, it doesn't seem to be a likely trade to support and rally from here. So this might be the more likely approach. Check this out. Look at my screen really quick, everyone. Resilience is negative, so right now it's likely to pivot lower. So not really a good sign for long side right now. So today's an event day, everybody. Today we had non-farm payrolls come out. It's one of the most important employment indicators. Measures the amount of, let me show you really quick. So what basically when these events come out, the market's behaving on a catalyst. And so random things can happen, right? So when you trade after an event, typically you can have markets shift around and people are going to treat it differently than just ebbing and flowing. Normally with our tools, we want to ebb and flow when there's no event, right? So you don't want to trade when there's a news event that can just shift people's sentiment, right? Normally markets are going to move in a certain direction based on the pressures and things, and not really always find a reason to move. And they're just going to ebb and flow. And so we monitor and measure the ebb and flow, and that's what makes our software really good. During an event, market's going to be random. People are going to utilize that to liquidate or to add to positions based on how they feel about the market. What if somebody was trying to get out of a trade, a nice bull week like we've had, and then they get a nice little pop at non-farm, and they finally just sell because they just randomly want to sell. You can't predict a lot of those bigger things and people liquidating or doing things after an event. So markets can randomly go. As you see right now, resilience dropped from like the high 80s all the way down to being negative as people utilize that high to sell off on. Not everything in the market is predictable. So like events are not predictable. So what you have to do is react. In a specific instance like this, the way that I would trade it, let me make this really big so you can see on my chart. The way that I would trade it is, as we said at the start of the day, you know your DD band is very close. Even if you were to long for a very small trade with a very small position, let's say that you have a budget of 20 and you just put in 2 and market dips to there. And then maybe you added like 10 more, like a huge jump in a position. And then you took that little scalp with the stop. You can utilize the randomness of an event to create an opportunity to take a second trade. But you also know your upside is fairly limited, that we're not betting on the market breaking DD and continuing to go. So anytime I see trades like this, these little 2-leg moves, I always tell myself I can either take a small trade in case it runs and goes somewhere, or I make sure that if it falls to where my second entry, that I don't go bust if it falls there, and I have enough buying power to jump in really heavily just to take that one little scalp back up to the target. So in here, we can just say that while the pressures do look like they're going higher, with resilience going negative, I would immediately, in this environment, say that a negative resilience is likely to push the market this way, which will force a hedge pressure break along the way. So anytime you're trading with hedge pressure inside of this box and resilience goes negative, it can predict a hedge pressure break, which is bad. So it's forecasting ahead of time that you can possibly have a sell-off before it actually happens. Yeah. So like resilience going negative can forecast and predict a hedge pressure break. So right now the anticipation is we're probably going to break hedge pressure and touch 451. So if I were in like a long trade right now, which I'm not, I would trim out if resilience was negative and make sure I wouldn't jump in on 10 more here. I would wait for the market to do that little dip and then decide something later. So like right now, it's not a good trade to long from, the way I look at it. You got your first $1,000 profit day. Good job. All right. You see right here. So as the market had opened, people were using that opportunity from the non-farm payrolls report to sell off of that high. And then of course, like this, whenever you're trading, this is a once a month report. Days like CPI, Fed day, non-farms, you just avoid those first couple hours before or after the report. Like let it do its thing, let it stabilize and come back later and make a trade. So what we teach people is you don't trade into events as randomness happens. The strongest bull signal we've seen in a while just deteriorated because people are actually just utilized. Like these are times where humans are doing big human decisions that you really can't predict or forecast. So, you know, obviously knowing as well that your upper limit is even here for your long, it's not really even a big run up anyways to take a big long on. So most traders here that we would teach wouldn't be jumping in at the start of the day with a very long position or a very large one, because we know that we only trade or day trade inside of these bands. Anything outside of the band is random, and once you hit it, it pretty much ends the day for the way you're looking at it. Let's analyze the non-farm payroll. So what it is in the so excluding the farming industry, right, which we look at the non-subsidized portion of American labor. So like farming industry is subsidized and the government keeps farmers floating. So we extract farmers, is why they call it non-farmers, from the data set. And this is all about job creation and all jobs that are not farming. So it's a stimulus. Is there stimulus in hiring or economic activity from employed people in the previous month? Now this is a month delay. So this report comes out is revealing last month's data. There are more people employed, which does make sense. We know that this, when we look at these data points, if y'all want to pay attention real quick, take a look on my screen. We look at the JOLTS, which is one of the things we talked about, the number of job openings. JOLTS are trending down, which means jobs are closing out. Either companies are eliminating them or filling them. Continuing jobless claims are going down while JOLTS are going down, which means unemployed people are going back to work. And we make that speculation while we stare at those reports. And when you come back and look at the non-farms and they come out, this confirms that analysis. So when I told you guys we always analyze the continuing jobless claims every Thursday, JOLTS come out once a month, and so you can make the assessment. JOLTS are let me show you guys really quick. This is a really cool lesson, and this helps you predict economical activity, right? So let's go back here. I'll show you something really quick. This is a cool lesson. This week. So I had a video the other day that says the JOLTS are one of the most important predictive reports to come out. What the JOLTS are is a relationship between a job that's open. I'll put a box here, and a worker that needs a job, and I'll put like a little stick figure here. Okay. And what a JOLT is, it's a job that is open. Okay. Here's an open job that needs a worker, and there's a worker available. So there's a supply and a demand. The other necessity is that there's active recruiting for the job and the worker. So the worker and the job know about each other because there's a recruiter talking to both of them. As long as you have these three pieces of the triangle, the U.S. Bureau of Labor and Statistics consider an available job part of the JOLTS. So if I'm a company that has like 5 accountants, right, and 5 positions for accounting, and 3 of them are filled and 2 of them are open, I'm actively recruiting, and there's accountants available that are unemployed, then it's considered a JOLT. Or a job opening, sorry, in the JOLTS. So if I were to eliminate those positions, like I no longer need to hire these people because I don't want those roles anymore, then the job is closed, and therefore JOLTS will come down. If I fill those roles, also JOLTS will come down. So when you're looking at JOLTS and it's coming down, it's hard to tell if companies are eliminating the jobs like leading into COVID. So everybody that was in a hiring spree pre-COVID, they all got shut down by the government. So JOLTS plunged because available open jobs got shut down. Companies couldn't hire anybody anymore during that time. So in this particular instance, JOLTS are plunging. That's actually bad because companies were not hiring those people. They were closing those jobs out. But in this case, JOLTS are going down, but not because companies are eliminating jobs, but because they're filling the roles. And the way that you can determine the difference between the two is you look at the continual jobless claims. These are people that are filing for unemployment insurance. You qualify for unemployment insurance means that you get laid off, not for performance reasons, but for your company's own reasons. And therefore, if you are unemployed and continuing to file for unemployment insurance, if that's starting to taper down, then what that means is people that were unemployed are finally going back to work. So when the continuing claims are going down and JOLTS are going down, it means a hiring spree. And then you can make that assessment by putting these two charts together. And how do you know it's a hiring spree? To confirm, I told you guys when I gave that lesson that we'd see the payrolls. We come back and show you the same thing. On that delayed data, non-farm payrolls are up, which shows that relationship is right. There are more people employed in the industries that aren't farming. So that relationship we've been looking at to show that little uptick, because JOLTS came down and continuing jobless claims went up. You can see that little uptick in non-farms, meaning that there's more people that went back to work. And that circles all the way back around to that video that we had, which is a pretty cool video. And we uploaded it, and it's in the Zoom calls that are recorded. So today, what we saw was that the resilience indicator just flipped from positive to negative, and resilience can forecast a potential hedge pressure break. So that's like one of the things that we're looking at right now. So right now it's not a good trading day. It's probably a day just to kind of sit out and chill on and wait for the market to kind of do its thing. Anytime you have an event like non-farms and markets react, and then all of a sudden you see a change in the dynamic of how things are laid out, when resilience goes negative, your brain starts to think of this. And if it has to break through hedge pressure to do that, it creates a hedge pressure break, which is an irrational market. So really, we don't trade irrational markets to begin with. And another thing is that in futures, right? I mean, the upside potential, we usually only trade to DD band anyways. So even up in here, there's not a lot of ability for markets to rally. We don't try to take the rally case to break DD bands. We usually trade to this box and usually call it a day. All right. because of interest rates. What up, y'all? What up? Here's what we said. Does everybody see right here? This is exactly why we say resilience can predict hedge pusher breaks. Do you see that right here? That negative resilience still shows that this is the pressure here. And let me show you guys on your cheat sheets really quick what that's supposed to reflect. But the cool thing is that even if you take gambles on days like today, you're playing with a couple of contracts, something small, something very small. You know it's risky. So anytime you know that things don't look great, you can always just trade small just to practice, or just trade paper or do something, but you know you're not going in all in long if things look bad. So here's your resilience cheat sheet. Anytime resilience is less than 0, these are going to show you the pressures. So inside the box, it tends to press to the lower side of the box, which would require a bull zone break. That's a lot. Now, DD is a very strong support at bull zone. So you have two different competing indicators right now. DD is pointing up from here. Resilience is pointing down from there. When you have to make a choice between the two, DD always outranks resilience. The bullishness of the market tends to hold this more than that breaks. Now, again, it's statistics. It's not always going to happen, but if you have to make a choice, DD's pointing the up arrows that I drew, and resilience is pointing the down arrow, which one wins, and DD usually wins that fight. You see that? So it's really hard to break a bull zone with the DD ratio being as positive as it is. So that bull zone really wants to hold. Right? Well, you have to look at the DD ratio, right? I mean, that number being 97%. 97% of the market cap of the S&P is still stuck in bull zones, being gamma hedged positive. So breaking that 451 bull zone on SPY is going to be a hard battle. Market's trying to fill the gap to the downside as much as it can, but it hits that bull zone and holds. 451 is going to be really strong support today, all day long. And I'm showing it on my screen if you guys want to jump in and check it out. You see how weird it gets though? Like it just hits that level, and anytime hedge pusher breaks more than one strike distance, the market has experienced some kind of unusual selling pressure that's tipped the scales from what should be positive hedging or long hedging to negative hedging, or vice versa. Anytime you break through hedge pressure one way or the other, it can cause a chain reaction that can accelerate the market in the other direction. What typically happens is that you have a massive switch in positions that are held by market makers who are hedged one direction, and then you flip them the other way. It's kind of like saying that you're standing on your left leg and you have to jump to your right leg. So they all have to go the other direction very quickly, which can cause a chain reaction. These are looking great. All right, what's up, guys? We use DD bands as an exit criteria. Why can it be used as an entry? You can use any pivot you want as an entry. It's just that with the pressure pushing to the upside, what are you saying is like what you would look for is maybe to short against it. We don't have rules that try to be contrarian to all the pressures that you see in the market. So probabilistically, it's more likely to go higher to get there. And once you complete that picture, it's hard to guess what's going to happen next. So I know it's a great question, Chase. I don't use DD band as an entry usually at all. Why couldn't it be a short entry? Because anything's an entry. Anything's a long or short entry. In our rule set, I wouldn't want to short when it's wanting to go there, right? It's almost like saying, while it is a possible short entry if you have a reason to short it. So in a day trade, the proper day trade is to trade, and I don't know why my futures chart is frozen. But the proper day trade is to go from here to here and then walk away for a day trade. I don't always try to see a move and try to play against it. Now, while it is rejecting, it still wants to kind of go there. At the start of the day, with resilience being positive again, I still wasn't willing to want to short either. I only short against monthly hedge pressure from below, or from hedge pressure from below sometimes. I short off of something because the pressure is short. More often than not, while there is rejection here, we don't have a rule for it yet. Now, we can always come up with rules, but how would you quantify, like, where do you short to and why? I mean, if you were to short, you could short to the level that makes sense, but then I would always get out of the way at hedge pressure. So if you were to formulate risk and reward, you can long and short anywhere. Ideally, if you hit that, if you wanted to take a short from here to there, as long as you have an appropriate stop and the reward to risk is good. It's not a terrible idea. It's just we don't teach rules to trade contrarian to the market for arbitrary reasons. Especially when pressures are up, I wouldn't short. But it doesn't mean a scalp, pretend that it's going to go up, doesn't mean you can't scalp along the way. It's just more dangerous to do that when all signs are kind of pointing up. Now, right now, resilience is pointing down, DD is pointing up. Yeah, hedge pressure pushing all over the place. So you're going to get some tumultuousness here. You're going to get some chances to play both sides, but we just don't teach it. I don't short them above MHP. I just don't. I try to wait for dips to buy instead of highs to short. Yeah. SPY monthly map. Let's take a look at it real quick. Okay. Okay. So as you see, as Travis is saying, look, you're right. Look at right here. Bear market's starting to creep back in. Bull market stable for a week. So what I think we do have, looking at the monthly maps, you see how the bull zone is still getting stronger through here, and then the bear zone is getting stronger through here. It implies probably that we are. Let me draw the direction of the market real quick. This is how I'm reading the monthly maps now. Is that we are likely to go and fill this gap. And it's probably going to double top. So we're going to rally for the next week. It's just like, you know, cross your fingers. Let's get something good here. And then probably, if we do fill that gap, expiration week is very bearish. You see that? You can always take a scalp against anything, Chase. And there's nothing wrong with betting on a rejection at a place. You just have to make sure you frame out your trade. Like, what would you want to see? If you hit DD band and you were to short, you know that in a BLU hedge pressure support, so you would short, close there, and then call it a day, just like you see right there. Doesn't mean it's not a terrible scalp, but you have to know you have that discipline to put a stop on the other side of DD and short it from here to here. But you know that you're not shorting for the market to collapse on itself, right? You would just take a scalp. No, we don't, like I said, we don't teach DD band as an entry. Unless it's float. Like right now, an example is if, and again, we still don't teach it as an entry, but it can be used as an entry. Some people do. If DD positive, sorry, DD is 97, markets are falling to the lower band. A lot of times people will take an entry here to bet on a scalp because of the float, but get some kind of level and then close out, like a little tiny scalp. Typically, if you're closing towards a lower band with a positive ratio or a bullish ratio, something weird's going on. So people do scalp, but they get out of the way because it is going to be random if the float fails. Let's see how that works. So, great question. Okay. right, guys, we're going to do some charting today. Let's take a look at some things people want to type in your favorite tickers here. We'll do some quick trade plan charts, and I'll just run them through real quick. Somebody said, would you say top of distribution zone for SPY is an exit if you took a position a half gap? Yeah. Typically, if resilience is less than 0, the answer is yeah, like a little scalp. But resilience is now positive, so the market has rescued itself. As you see, because of those events that happen, right, creates a little bit of... like you have non-farm payrolls come out. So typically we don't trade around events because markets can kind of shovel things around a little bit, and you can have your indicators be thrown off. But minus the non-farm, you see it took a little bit for resilience to come back to positive, so market's back to looking good. Right, so events can cause that behavior where positive resilience goes negative real quick and markets kind of recovered. All right, what's up, everybody? Let's run through some of them. All right, hold on. Microsoft, bull long up. Okay, the way that this works... Sorry, Empower doesn't have data. All right, let's go. Right here. So the way that it works is when you type in a ticker, it's going to give you a code. The code's going to represent something called a liquidity map. And the liquidity map here is going to be related to one of the cheat sheets we have. Now, if you're using Rocket Scooter, we give you all these cheat sheets that show you how the indicators behave. This is really cool. So make sure that if you need information or how to get this stuff, just send me a message or join the Discord and link below and send me a message. All right. So all these letter codes correspond with certain pressures in the market. And I use these for day trading, scalping all day long. So BLU is bull long and up. All things point up, which is great on Microsoft. Does everybody see right here that this black dot is the open price? This is the open price. Open, blue, back to open. See, open, blue, back to open. Does everybody see that? Look what Microsoft is doing. Literally exactly that. How cool is that? This is what liquidity maps do. So what I do is I know that I can make a trade plan just by utilizing that known pressure. If Microsoft is falling, 327.5 is a long entry with a stop to trade that we go back and touch that open price. This little V shape. See how that is? So the algorithm does this and prints this on the chart for you guys every morning. All right, so a couple more. Tesla, right? Now Tesla is the same setup, bull long up. The thing is that Tesla doesn't have the actionable pivot until here. So I wouldn't do anything in Tesla. There's no indication that I should buy or sell anything here. If I were swinging Tesla on the long side, I definitely want to add to my Tesla position down here, but I definitely want to stop if we got below it. So something like Tesla not being actionable right now, I wouldn't be doing anything on it. Now, one thing that some traders can do is that they can bet that it doesn't break this blue. Obviously, it's a really strong setup. Well, traders can sell puts, right? Or sell vertical put spread on the other side of hedge pressure is a way to do it. Okay, SPX. All right, look, SPY. We use SPY, SPX, same thing. It's the same setup. Open, blue, open. See that right there? So again, somebody trading this could sell puts on the bottom, like a put spread on the bottom side. The other way around. Somebody could long calls off of hedge pressure once you had hedge pressure. But you can see how this pressure like that, this V-shaped move, looks pretty cool. Okay. Definitely to the upside ribbon. All right. So also with the S&P, you have two other indicators. The DD ratio being greater than half means that this bull zone is support, usually, which is happening. And this resilience indicator being greater than 0 means this half gap is support. So you have all kind of pressures from SPY today pushing it up from those three different arrows. Ribbon, as you see, they're all pretty much similar. Now, again, not actionable off the hedge pressure, but it's still, your brain would tell yourself, okay, it's not bearish. I've got long entry points from here and here. And then, you know, one could, if one was day trading or swing trading, you would take that into consideration. Anytime the open is support, like you gap up and the open is support, you can always long something if resilience is greater than 0 or the S&P, betting that the open stays support. It's always the way to do it. All right, everything's point up today. Roblox, y'all like this? Okay, cool. You guys are awesome. All right. Appreciate you guys coming here, by the way. If it's your first time the Rocket Scooter stream, welcome. We do this live every day on YouTube for about an hour. Roblox, BLU. Look, all the liquidity maps today are pointing up. And the same thing, you gap and go, the open is support. Resilience is a tiebreaker at half gap for the S&P, and one can say that the S&P is rallying higher. By proxy, people sometimes use that to trade their stocks support there. All right. Snow. All right. So we're doing a trial membership for Rocket Scooter. You guys are always welcome to check it out. You can join and use the platform just for free. Covers your data, $35 a month. We normally charge $200, so it's great. If you guys want to check it out, there's a link below. You can just dive in, learn all this stuff, play with it for a little bit, and no obligation to stay or anything. Snow, again, bull long up, supported open. You see how all the stocks have that same setup? Actionable off a hedge pressure down here, but that's way out of bounds, right? So stocks are pressed so far into bullish territory, they're not even actionable off of bounce points. I mean, they're basically stuck. Just neat to see. WNS. Some of them, let me see. This one doesn't have data. It's like we don't have data for that one. All right, Netflix. There's not options data. Sometimes we don't get it. Netflix, bull long up. It hasn't changed. I think every stock I've looked at has been the same thing. You see how that half gap supports, and you see how all the stocks are looking pretty much exactly the same way. Open, support, half gap support, resilience greater than 0. Disney. Ugh. Okay, somebody said Disney. Disney's garbage. Let's see if it changes. Disney, the one stock that is not bullish, because Disney, that's right. Nicole over here throwing some good ones. Disney, mean reversion. Mean reversion presses to the middle. It's not bullish, it's not bearish. And you see how it presses to the middle of this range, just like that. I'm telling you guys, Rocket Scooter is next level stuff. We're using options to predict where markets are going to pivot and move based on the landscape. These have all been correct, right? It doesn't predict the stock market or the movement of the stock market, but it shows you where those pivots are and where those pressures balance. Disney opens right here, pushes to the middle. You see that? How beautiful is that? Okay. Who here is your first day checking out our stream, by the way, if you haven't been here before? Coin, that same bull long up setup. They're all the same. Now again, being up here, not necessarily actionable. I don't day trade unless I get a hedge pressure tap or anything. So what I like to do is I like to trade where the arrows are and nothing else. So I see like coin and some of these other ones. I don't normally trade off of open and close. Some people do. I personally don't. I like to get those hedge pressure bounces or just kind of wait on it. So yeah. Apple, you meant AAPL or APPL? Apple, same thing. Like all the stocks are pointing up. So actionably, like there's no actionable pivots on Apple either. What did I do with the hedge pressure here? Hold on one second. You guys see that upper DD band right there on NASDAQ has been tapped? Calling it like a day. Let me go ahead and make this full screen really quick. All right, get off of futures here. Somebody said Apple. Same thing, bull long up pressure. Let me show that again. So what you do every morning is these liquidity maps are printed and calculated right at 9:30. So the minute the market opens, you've got those pressures. I look at this and I say bull long up and I go, the market is generally pressing higher. And any dips I look to buy, right? This is not like I'm looking to short and fade this. Do y'all see how that works? So the different liquidity maps are going to represent different pressures in market. This is where options are distributed. So this is like market maker gamma hedging and delta hedging. This is a downward pressure. So you'll see some of them that are pointing down, some of them that are generally pointing up, and others that you can like scalp discrepancies between the levels. So usually like in between hedge pressures, you can trade both sides very easily. But you see the majority of today, almost all of them have been this particular map, bull, long, and up, which means you're in a bull zone. You've got long pressure off of weeklies, and you got long pressure off of monthlies, which is kind of cool. All right, first time, love it. Well, you guys are welcome to come every single morning. We do this every single day, and we can run the tickers y'all want to look at for y'all in the mornings. Hood, bull, long, up, same thing. It's pressure pushing there. You see, so generally speaking, right, if I were trading something, I would wait. Like if I were to long at the open, which is sometimes you can, I would long really heavy at hedge pressure with the stop on the other side. So for instance, I was going to long because the market's supporting the open, trade up, bounce on open, take a long, always a great trade. I just know that I can always double down at hedge pressure, and I know that I can do risk and reward the whole trade down. So I could say, okay, I'll buy Robin hit 11.10, and maybe at 11 I'll buy some more, and I'll stop if it fills the gap on the other side, maybe here. Right? And then you can formulate risk and reward, but twofold trade, right? That's how I look at things like that. Robin Hood. LI? Okay, cool. We're going to do a trading boot camp today as well. So everybody that's here, at least for now, go to the Discord and link. I'll give it to you really quick. Click this link. You guys can all come to our first boot camp session today. We're going to do some training. Y'all can come check this out. If y'all just heard about Rocket Scooter, we're glad y'all guys came to check it out. So we're kind of removing, we're adding a different layer of the market than just technical analysis. We're looking at options to predict pressures, and that really aids and goes alongside any kind of analysis methods you do, because it shows where people's real positions are and how the market behaves against positions. Despite what price action looks like, this is where the institutions and market makers are positioned. This is where the bulls and bears are stationed. So you know if you're in a bear market because you'll be in bear territory. We're clearly in a bull market and we're still trading up. Market's been bullish, right? Any more? Where do I sign up? Your entry was shit on Microsoft. Oh, here, go. Do the extended trial if you want to check it out. We tell everybody at least check it out. Like, you waste $35 on a cocktail in a restaurant these days, right? So, $35 will get you a whole month of training, and you can play with our platform. We'd love for y'all to check it out here. Click that right there, and you can. It pays for your data feeds, and you get to play with the platform for free for 3 months, and come through our entire training bootcamp. All right, XLV, let's go. I don't think we've had anything that was like XLV. This one was great and actionable on a bull long up on hedge pressure, like supporting hedge pressure, supporting hedge pressure. And one of the things that you'll notice about hedge pressure is you see how there's a volume spike right here when you press through it. Hedge pressures actually predict high volume spikes, because what this is a shift from positive to negative gamma. If you know how options work, gamma is equal to del delta over del price. Sorry, del delta over del time at a fixed price, partial differential, and then delta is equal to del price of option, del price of stock at a fixed time. So if you know your partial differentials, I know you all vomit in your mouth a little bit because it made you think of college. This is the rate of change of delta, which is the rate of change of the price of the option versus the stock. The rate of change of the price of the underlying is equal to the amount of delta hedging. So if the price is changing very rapidly, the amount of delta hedging goes up, which is what creates volume spikes. So long story short, hedge pressure is a little bit of a calculus trick that allows you to predict when volume is going to go up in the market. We've actually been able to predict the highest volume pivots of the day using hedge pressure. That's exactly what the secret is. So it's a capitulation point where market makers slip from negative to positive. Basically what it means is just predict its high volume pivots. Look at this volume spike when you touch hedge pressure. Every time you touch hedge pressure is a volume spike. And as a trader, if you know where traders are going to be, you just make your bet here, whether it's long or short, doesn't matter. But don't bet anywhere else. Everything else is arbitrary and random. You know traders are going to back up right here. You take your trade there. Does that make sense, everybody? So the trick was we threw out the idea that you're going to try to predict the stock market by looking at where where price will go. Instead, we're isolating where traders will be, where volume will be. So the idea is that hedge pressure is the highest volume, one of the highest volume pivots of the day. And that is by far the best information you can have as a trader. Where are the traders parked? That's it. Couple more. XLB, bull long up. Palantir, our hut. Yeah, I got you one. Palantir, bull long up, same thing. Now here's another thing that we also teach, is that the bull zone that you see, this dark gray, is typically support when DD is greater than half. So stocks are remaining bullish as a whole in the index. So one can assume that as long as all the stocks are trading together, that other stocks like Palantir probably hold that bull zone as well. First time. Awesome. We're glad that you all are all here. You've been saying you're going to sign up for too long. It's 3 stacks. Come on, baby. We know you want to sign up. Come check it out. Was aware from you on the Fatty. Oh, from Kevin from a few months back. Oh, we love Fatty. He's one of my boys. They just had a baby this last year. I need to catch up with him, see how he's doing. Yeah. Kevin's a cool dude. Jordy kills with HP. Dude, every day, man. Jordan, when I first told Jordan and Wolf about our stuff, everyone like rolls their eyes anytime something like, we got this thing, man. We completely break in the market. Everyone's like, yeah, right. Showed Jordan, he was like, wait, what? I was like, just watch it for a week. And after a week, he was hooked. He was like, this is really cool. He's like, you have an actionable pivot. He's real honest about it. He's like, it's an actionable pivot. It works most of the time, and sometimes it doesn't. But I know that's the place I need to care about. And in the simplest form, that's really what it is. You know, all of their trading is just random and noisy. Like Palantir doesn't have anything actionable other than possible support at a bull zone. But anytime you cross through or touch hedge pressures, it's always going to be actionable. And one of the cool things I can show you on the scanner is that we can actually scan for certain setups. So an example is, let's find some bear setups today, if there are any. So this is going to look at the liquidity maps that are on the bear side, like bear short up, bear short down, and these two. Let's see what happens. And let's find some that are like distance from hedge pressure, like right on the edge. Dish. Like Dish is on the bear side and just now breaking through. So if you're looking for something that smashes through hedge pressure, maybe trading down, you can actually sort by certain liquidity maps that are giving you the setups you want, which is really cool. Now I'll give you a trick if you're using Rocket Scooter, and I want you to know my bread and butter when it comes to options day trading is if you scalp these hedge pressure scalps like this between the yellow and blue monthly and weeklies, they're some of the best, easiest pivots you'll see because it's got two high volume pivots that it plays against. So I usually like to scan for those when I'm doing like day trading options, which is rare, but I'll do it sometimes on the stream. That's a fun setup to look for. So like, as you see right here, let's pull up some of these stocks. You see these are ones that are below hedge pressure and trading down. So bear short up as an example. You see this one? Pressure against hedge pressure this way, and it's not rallying this way. This is one of those ones that I would short from hedge pressure, right? See how that works? If long the market, you always have to ask yourself, if you're long or you're shorting, are you day trading or swing trading? When you're looking for upside targets, Colin, you have to always ask yourself what's your time frame. You're talking about just for today, just for the next hour, or for the next month or year. Is this a separate chart? Works with Webull? This is our own trading platform. So if you sign up for us, you get your own software. It links, the link is on the website. You just click the button and it launches this in a separate window. So it's a standalone piece of software. You can use it for no matter what broker you trade with. You can still use our software. We give you the data feeds. But you can't trade through Webull through our platform yet. One of these days, we're gonna have the ability for you to trade through a bunch of different brokers. Right now, we already have connected EdgeClear, which is one brokerage for futures. As the months go by and you guys are in our program, you're gonna see that we're gonna add other brokers through here. Webull, TD Ameritrade. We'll have a bunch of other ones here as the months go by. But we have to develop it, so it takes a little bit of time. But broker connections is the newest thing that we're doing. So that's why I say you guys get in now before all that stuff launches, and you can get a really good rate whenever we do get it launched. Because our goal is to be able to trade through every broker that allows you to trade through an API, and we'll connect to all of them. So it'd be like the most universal trading platform out there. Thanks for this. Is a review if long the market. Yeah, so Colin, you're talking about you're lined up with stop and profit, just mainly taking advantage of the time to review our specific disciplines. So in a day trade, I my thinkorswim here. In day trades, you usually trade to DD bands if you're inside of them and usually call it a day. These little green lines. So if I'm long or short, once you press and tap or get close enough to these things, usually the day is over. So today's example was, that trade upper DD band would basically be my limit for upside moves. Any scalps, I would close at this green band. You see, like right here, an example, you don't have a lot of pressure and it's really hard to break through it. And when you do, it can be violent, but we don't bet that it breaks through. Usually it gets close and you call it a day, all 3 days, right? So in futures, for instance, or SPY or anything else, like you said, you're looking to trade to those upper bands. Right there. You see that? So even if you're trading right now, anybody scalping or trading is not really looking for big breakouts. They're like little bites. Tool looks very impressive as a 20-year sell side quant. It's very interesting as say maths don't lie. People do. Very impressive. Oh, thank you. My engineering degree was getting rusty and dusty, so I had to sharpen my math skills in the financial world. Does ABGO bring the SP resilience down? I don't know. Let's take a look. Our belief was that while price action and price history, like one thing you'll never see me do. No, this is still a bull long up, by the way, like everything else was. You're never going to see me like pull up past history on charts to start analyzing a stock. Like I don't go back and say, what's the high, what's the low, what's the head and shoulders, like all the traditional patterns. We've thrown all of that stuff out. We have a very simplistic approach, which basically looks at options, because options are people's showing you their cards. If I have let me flip a ticker here, Apple. If I have Apple 190 calls for this next Friday. And I've told people between now and Friday, I want to be long Apple as long as Apple's above 100 shares per contract. So you're telling people what you want to do in the future with options. And if you can isolate where market maker options are that are hedging against the underlying shares they're trading against us, you get an even stronger view of the real risk of bulls and bears. Because a real bull and a real bear is defined as the following. A bull is somebody that longs the market. A bear is someone that shorts the market. And if a bull longs the market, when there's not an adequate seller and a market maker has to be the seller, and then a bear also shorts the market at a higher spot, and a market maker has to be the buyer, then you have an entity in the middle of both traders that just disagree in price, who's trying to neutralize both positions simultaneously. As price just moves up and down, they're going to adjust their position incrementally to balance. So the idea is that when bulls and bears are pitted against each other and both trading against the house, if you try to measure what the house is doing, you can see where the risk, you can derive the risk of the bulls and bears, and that's how we did it. How do we get a bull zone and a bear zone is through that kind of reverse engineering mentality. The bulls are where longs have traded against the house. Bears are where shorts have traded against the house. And this is the discrepancy between the two of them. The wider the space, the more volatile the stock is. There's a lot of cool things that you can take out of that. But the goal of us was to see where that real distribution is. Where's the market more bullish than bearish? Where is it more bearish than bullish? So Apple, while still trading way into bear territory, if you wake up and people are trying to short Apple, saying that Apple's bearish, they're kind of silly because Apple's clearly bullish. But it doesn't mean Apple can't fall in bull territory, but over time, this is still support. Does that make sense? So I look at it like that. And every day we wake up and we get a new landscape, wherever that bull side bottom is, that market can dip to there and I'd be willing to swing it from there. So if one were to short in a bull market, it would be very silly to bet that the market goes any lower than that. So like if people are buying puts like 170, 160, that's just silly because it's going to be very hard to escape a bull zone if it's bullish. And that's how we think of it. Like where will markets not go? So a lot of times what Ashton teaches is selling options, like right here in bull zone. It's very hard to break a bull zone. It's very hard to break a bear zone. So if you were to sell puts like all down in here, very short-term puts, very unlikely that they're going to go on the money. And that's where Rock Scooter really shines, is on the sell side of options. Where markets are likely not to go. Those are the bets that we love to take. Baba going hard. Google getting pushed higher, like 146. Yeah, let's get Google. Goog or Google? Goog. All right. Yep, same thing. Google bull long at pressure 135 support, like that. Like that. Okay. Kevin, stop making. You said, "Oh, Kev, stop making content." Oh, that's probably because of the baby. I'm sure he'll be back. I love his videos, man. He makes great stuff. Thanks, Matt. Get you lined up. Thomas, check. I've seen a trade on 20 OM, some city, blah blah. I'd have to say it's pretty cool. Impressed and never impressed. I appreciate it, Egbert. I think for me, I not having a financial background, just being a mathematician that entered finance, I had a pure kind of like untainted view of markets. To me, I looked at it, okay, here's a data set. How do I play with it? It's not like, okay, here's what I have to undo all the stuff I've been taught, like chart patterns and technical analysis. I didn't really learn a lot of that stuff. So I didn't come into finance thinking things should work a certain way because everyone uses them. I came into finance and said, okay, here's data. Here's all the pieces. What can I do with what I've got? So I took a pure approach. And like the years of experimenting with trying to find relationships between, you know, data sets, I really found out that technical analysis is it can't predict anything. I really found that out. It's good at it's like quantifying data for people to give them like a two moving averages crossover that quantifies candle data into one decision point. So it makes trading easier for people, but it doesn't predict anything. And that's why I found out. But I found through like experimenting with options and options data, it's very predictable. Matter of fact, the one thing that we do claim, our claim to fame, is that hedge pressure is a predictable volume spike. Anytime you touch it, you can predict volume will be there. That alone is a revolution in a feat of itself, because if you can predict where volume will be, you can predict where traders are parked. You're actually just predicting where order flow will change. So unusual activity and unusual order flow, it's actually what we're predicting just through the landscape of options. And all this data is derived straight from options. For example, let's find hedge pressure break setups. Like you can see that anytime you touch hedge pressure, I mean, look at this. Do you see this on the volume? We've cracked a major code in Wall Street, is pulling the hood back and predicting where traders will be. Look, I don't know if that doesn't impress people. I don't know what will. So we're actually predicting where delta hedging is maximized, highest market maker gamma, and sold options. Basically means highest order flow of hedging. So there's the volume spike from it. So if I'm trading on SLV for silver, I know where I need to find where traders are fighting. This is where the battle is. Imagine two armies are marching. I like to say like this, like I'm staring, this is me. I'm like in ancient Greece. I've got a top hat on because I'm fancy. I see like down in the valley below, there's an army there of bulls, an army there of bears. And I see them marching. I can't tell who's going to win the fight, but I can tell where they're going to fight. And I can bet on where the fight's going to be. That's kind of what this is doing. So the idea is that if you know where traders are going to fight each other, and you use a little bit of extra intuition. Oh, well, look at this. I'm staring at this army over here, and half of them are throwing up, and the other half are missing their legs, so they got chopped off in the last battle. So I'm going to bet that this army is going to win when it gets there. So that's kind of what this is doing. Like, now, an example is silver. Silver should bounce and hold here, and the fact that it doesn't is a bad sign. So if that volume comes through and it doesn't support, you have an idea that silver is probably not in a good spot right now to long. So it's not even predicting the market, but if you were to say that it should do this and it doesn't, then that's how you know something's wrong. Okay, you know, the pressure is just too much and it overwhelmed this very high volume spike. There's just overwhelming selling. Let me not try to long this from here. So knowing like when to get out of the way is what hedge pressure is good for. The times that it works perfectly. The times it doesn't work, I just walk away. Hey, does hedge pressure change throughout the day? It actually does not. One of the neat things about the hedge pressure in walls is that this landscape is solidified at the morning, and we don't change these numbers throughout the day. These points stay the same, which is great. Between 9:30 in the morning and 2 p.m. Eastern is the window at which this stuff is active. Like, we basically don't trade after 2. And so inside of this range, hedge pressure is actionable all throughout this time. Now, while theoretically options are being created and destroyed throughout the day, hedge pressure theoretically should change a little bit, but it's nominal actually with the amount of order flow that comes through versus the amount of landscape. The amount of money that's piled into the options that are balanced on hedge pressure, the day-to-day trading is just drops in the bucket. So while hedge pressure can move a little bit, and all these things can move theoretically, when we don't try to account for that, it's still actionable all throughout the day. It's just because it's nominal movement. Good question, Omar. So these things stay put all day long, which is the best part. They don't change. Technical analysis trying to make sense of noise. It is. It's data smoothing. Can't seem to add Discord. Okay, so in Discord, you have to be a member to get access to the Discord. But if you join Discord, Paul, just join it and send me a message. Send Matt a message. And I'll add it. So normally whenever you, if you join Rocket Scooter, the bot will give you the Discord roles. Ask for help. That's all you can see if you're not a member. So send me a message. I'll show you how to get into it, or I'll post a link in the ask for help to the boot camp. You notice that after a few touches of HP, the volume doesn't spike and then it falls through. So I watch a volume spike for each tap. Otherwise, it can pass through. Yeah, as long as you don't see that volume, then hedge pressure doesn't have that integrity anymore. Now look at silver. Do you see how the silver monthly map is interesting setup, right? Illiquidity the whole way down. You joined, but the liquidity map is super zoomed in and hard to read on the platform, or where are you talking about, bud? Ryan. Ryan, are you talking about the Discord, or are you talking about the platform? What are you talking about? You say liquidity map is super zoomed in. Like your platform doesn't look like mine. If you can send me a screenshot of what you see, a couple things you can do is if you go into the settings in load default, make sure you didn't change some setting or whatever. It should work. You can also, zoom in on the charts this way. You can also go to auto scaling and turn auto scaling off in case it's scaling it weird on your computer. What I think about a short, it's not a terrible idea, but I don't short if I get the idea that the bull setup is not going to work. I don't actually take the short. I just get out of the way of the long. Like, is that possible? It's very possible with resilience being negative that we'll probably sell for the day. It's probably not a good, but I don't normally flip short. I don't undo my original bias and then flip short on a potential break. I would just stand aside. I don't try to take every single long short that I see. Auto scaling work? Yeah, no problem. There you go. Glad we fixed that up for you. Okay, everybody, do me a favor. Go here to this link. There's the Ask for Help channel. Is what you'll see if you're not a member. I'll post a link there for the boot camp. Promise. And we'll get started at 11:30. So about 45 minutes from now, we'll get started. I'll post the Zoom link in there. Oh, hey, what's up, Paul? We'll have like an open little...
I know, everybody. I'm so sorry. I know it's y'all's first time in the stream. I'm just, I'm working on some things right now. I'll be right back. All right, everybody, what's up? I'm back. Sorry, I know you guys are waiting for me. All right, we're gonna call it a day. We'll head over, come to the boot camp in 25 minutes. Everybody, make sure you click that Discord link and go in there. And go to the Ask for Help section. We'll post that Discord link there. Come to the boot camp. We'll make sure everybody can get started with some of the lessons, things we're going to be teaching. We love y'all, and we will see y'all later. Thanks for tuning in and coming to the Rockstar. Sorry, I'm just kind of multitasking this morning. I had to disappear for a little bit. We'll talk about today's trading setups and everything else, and we will see y'all later. Thanks for coming to the stream.